Well, good morning or good afternoon, wherever you're joining us from. Thanks for joining me here today. We're going to talk about options trading and how to use our automated solution here for our proprietary strategies. We're going to look at pre-built option spreads, automated risk and profit controls, and we, of course, can use strategies for any market environment. That includes hedging your stock portfolio or simply getting directional, speculating with up or down movement. And we have the most unique trade alerts you've ever seen. These are one-touch trade alerts, a new technology that we developed, and we've never seen this before. So we're going to get started right on time. And let's start with the preliminaries here. Remember, we're speculating and we're looking to accept risk. We're trying to make money. And of course, that's the idea here, but there's always risk when you're speculating. So do take a moment and look at that risk disclosure. It is important. Remember that all funds committed should be risk capital, and past performance is no guarantee of future results. And a little bit about us, a brief introduction here. We are altavest. Since 1997, we have been a registered introducing brokerage firm, and that means we've got 26 years of doing this, and we've traded tens and tens of millions of contracts over the years. And before I go further, I just want to point out too that be sure to use the questions and the chat feature. Let me know if you have questions along the way, and I'll do my best to get to them, of course, but we will have a Q&A at the end. So should have noted that. So feel free to chime in anytime with your questions and your chat. I appreciate the feedback. I don't like to feel like I'm just talking to myself here. So we've got a good crowd. And again, thanks for joining us. But we are a futures and options brokerage. That means we're highly regulated. Our operations are audited at least yearly. We're registered with the CFTC and a member of the NFA. We're located in California. And you may have seen some of our presentations in the past and some of these other venues. So thanks for joining us again. A little bit about myself. I am Eric Gebhard, been doing this about 30 years now. And I founded Altavest with my business partner here, Mike Armbruster, in 1991. And that's when I also, I became started in the industry in 1991, but we founded Altavest in 1997. I have my BS in business administration from the University of Southern California. So those are the Trojans. And with that said, what I'm going to do now is just give a little brief background here. I have my Series 3. I mentioned that's futures trading. I began in mutual funds and annuities with my Series 6 and 63 securities licenses. And also, I have my Series 65. That's the investment advisor law license. Okay. I was just checking in here, making sure everyone can hear me. It looks like we're good. All the attendees, looks like we got a bunch of people joining here, continuing to join. So in any case, what I'll do now that I have introduced myself, I will go ahead and shut down the webcam for now. Gives you more room on the screen. Okay, so this is what we don't do. We're not trying to day trade the daily chop in the individual stock markets or anything like that. So this is not what we're talking about, folks. And we're not going to try to do this either. We're not making what I think are worthless price predictions. Here we go. 20 S&P 500 forecast, anywhere from 5,330 down to 4,400. And that was from a year ago. So, I mean, completely worthless range of price forecasts and targets. So we're going to look at professional style option spreads. We think we have a better way of doing this. But there are some barriers, and I would love to get some feedback from all of you. So use the chat there as well, and let me know what you think are the biggest barriers to your trading success. And I think I've identified the three that I most often hear about in one form or another. Too much noise. So there's pundits on TV and social media, opinions, newsletters, just a lot of static, a lot of noise. Social media stars are moving the markets. Most popular source of investment ideas is social media. People like this on social media, and this is where people are making their stock trading decisions, especially the younger crowd. That's all storytelling and narrative-based trading. That's not what we're doing. You end up broke that way. It looks like the day trader army lost all the money that it made in the meme stock era. Just took about a year and a half. So anyway, we're gonna do something totally different. I'm gonna pick on Jim Cramer. He's well known, and of course everyone's fallible, right? No one's perfect here, but he's got a big footprint. He's got a big audience, and should we listen and do what he says? He says here, March 25, the bear market's over. Right here in this red line, that's when he said the bear market was over. And of course, we've subsequently dropped dramatically since then. He said September 11, we've seen the lows. So right here on this red arrow, that's where he said it. And of course, market continued down. He said to buy Meta or Facebook here. I think it was Facebook earlier. Buy it here, buy it here, buy it here. Just continued to drop, fell 20% in a day right after he recommended it. He said he got emotional. Then he said he did a bad job. He got emotional after the stock plummeted. But you want to avoid that, folks. This guy says here, you always invest based on your feelings. How do you feel now? And this guy says broke. So again, no storytelling and narrative trading. It's not how it works with us. He even talks here about Elizabeth Holmes saying, Kramer said that she was the next Steve Jobs. Of course, now she's going to prison. He said Sam Bankman-Fried is the next JP Morgan. Well, of course, he'll be in prison too. So anyway, and there's also an ETF taking the opposite of Jim Cramer's position. So again, I'm picking on him, but I think I'm making a illustration here. And even the crypto personalities, again, FTX monopoly, everywhere you go to jail, it seems. $100 million manipulation scheme in crypto, crypto lender wiping out 7 years of profits, crypto brokerage laying off 30% of their staff, Coinbase firing 20% after firing 18% in June, 116 billion in lost crypto wealth through 2022. This guy here says Bitcoin can plunge 70% to 5,000, and the other side of that is others are predicting a 2023 surprise to 250,000. So I don't know. That's just a lot of noise, and that's FOMO, fear of missing out, storytelling. It's not investing. Okay, what about this? No time in the day. I think this is a big one for us. So even even if you're interested in doing some trading, do you have the time to do it? Do you have time to sit down and, does your office look like this? But really, our time is limited. I took these off the internet here, just captured these here. This guy says I trade full time in front of my computer from the market open until it closes. I watch, and every once in a while, I'm doing this after market hours. So trading full time, 10 to 12 hours of my day, consuming. But most of us don't have the time for that. We'd rather be doing something like this, or this, or this, and my favorite of all, this one here. So that always feels good after a long, hard day of work. So even if you are able to find some time, can you even beat the market? Here's some studies here talking about day trading success rates and beating the market. Charles Schwab analyzed their active accounts. Traders underperform a simple low-cost index fund, and the most active traders are the worst returns. Here's a Taiwan study, 15-year period, less than 1% of day traders beat the market. So number 3, here's the third one, no professional guidance and really the wrong tools or not even any tools at all. So you need that guidance oftentimes to help you focus and control your emotions. As this actor here is telling us to control our emotions, but it can be expensive trying to convince the markets that you are correct. And that's from Ed Sequoia. He's a trading pioneer from Market Wizards, a great book. So you don't want to end up like this, arguing with the price, still thinking the market was wrong, taking that all the way to the grave. You want to stay off of this emotional roller coaster, this cycle of euphoria and capitulation and surrender, and you want to avoid that. And it's tough though, because Motley Fool is right. They say sometimes our worst financial enemy is us, and that's because we have confirmation, anchoring, and recency bias. That's something we're all susceptible to. And this one image here, I think, summarizes that perfectly. When things are going great, we tend to think we're a genius, but getting overconfident can really be our worst scenario. Now, algos, they have no emotion, no bias, and they're dominating the landscape. 90% of US equity trading volume is systematic trading or high frequency trading or AI or whatever you want to call it, machine driven. 90%. So here's where we are, folks, in the trading paradigm. We're down here and the robots are now kind of dominating the landscape. This is what it used to look like years ago. Old grainy video I took visiting the trading floors. Wasn't too long ago either. And now this is our competition, non-emotional automation, built-in risk and reward controls. So with that background, let's jump into an example of how an insurance company might trade options, and of how we might be able to trade like an insurance company would trade options. And we would get paid premiums and assume that risk, and we sell and manage time, but we do insure ourselves, meaning we hedge our bets, so to speak, and we would be consistent and patient along a process. And we would look at math, probabilities, and look at the favorable longer term probabilities, look at, like I said, the statistics, actuarials, the math. So we're gonna look at premium collection strategies. We call this lots of base hits by going short and selling options and collecting the premium that other people pay us. We need to be consistent and patient. We need to manage that risk, expecting to have losers along the way. And of course, manage reward. You don't want to get too greedy either. That's just as much as a problem. You need the proper tools to make this happen. And again, base hits, we're not swinging for the fences and going for the grand slams. These short option or premium collection strategies can be non-directional. And if that sounds unusual, I will explain it, meaning we don't care which way the market moves. And of course, you can have bullish and bearish strategies as well. And all of these outcomes are targeted with predetermined risk before we place these trades. These are called credit spreads. Every position is insured or hedged, predetermined risk and reward. And again, non-directional strategies are available, and we use those often. And we're going to focus on stock futures index options, not individual stock options. And the reason why, there's three big reasons. First of all, an index is always less volatile than an individual stock that can sometimes move up to 50% in a day. Even a large cap stock can make big moves, 20% in a day or so, like you saw there with Meta. And then, of course, if you're using an index, you can apply strategies for all directions very easily. You can hedge your portfolio. You can do directional speculative strategies very easily with an index. And of course, if you're trading an index, you're looking at really just one market or maybe two or three, not, I think there's something like almost 7,000 securities, individual stocks and ETFs. So the simplicity of trading the index is certainly a welcome change from trying to track thousands of securities. And there's a large margin of error with the index and the strategies that we use. So for example, in this graph, here's your upper boundary on the trade, here's your lower boundary on the trade, and the market could kind of make moves in the middle here, and a trade like this can still work very well. We'll explain that in just a second, but we're using stock index futures options, and I will get into why in just a second. But remember, with options, there's something called the Greeks, and there's a bunch of them, and there's derivatives of the Greeks. They call second order, first order Greeks, but you don't need to know any of that. We're going to look at two very simple: delta, and it means how much does the option value change when a change in the underlying asset occurs. It's also the approximate probability of expiring in the money. So very simply put, if an option delta is 0.25, that means there's a 25% chance it expires in the money, but conversely, there's a 75% chance it expires worthless or out of the money. And of course, delta is always moving with price and time. It's not static. And this is important here. Keep this in mind. It is not the probability of a winning trade. So sometimes people make that mistake and think, oh, well, I have a 25% chance of this trade making money. And that's not really the way to look at it. And now there's also theta, which is sensitivity to time or time decay. So options, of course, have limited life. They're a wasting asset. And so theta is referred to in options as the equivalent of time. It's a negative number, and it equals 1 day of time decay. So here's an example. If an option's 10 points and theta is negative 0.05, the next day that premium is 9.95. The next day after that, it drops to 9.90 and so forth. So that's the decay, the theta decay. Or basically, the clock is ticking is really what that means. So as you approach time 0, the time is ticking away to 0. The percent of that premium remaining, the value of the option, basically drops and drops and drops. So remember, if you are only buying stock options, then time or theta is working against you. So here's a short little video I found, actually. I thought it was pretty good. This woman, I think she's an analyst with CNBC or works, I can't remember exactly her title, but here's the title for it. You can find it on YouTube. But I took a few shots here. It says the appeal for a lot of retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high. So we're going to talk about option spreads, where you also sell options, and that's what professionals do. And she says an option spread calls for buying and selling different contracts, and it's a common way for investors to hedge risk and volatility. And it's usually cheaper because you can offset your cost by the proceeds from different contracts. And it's been used by Wall Street professionals for decades. So she's absolutely correct. And this is an interesting bit of trivia. In 2021, 11% of Robinhood's active users made an options trade, but of that amount, fewer than 1% actually made a multi-leg options trade or a spread. So that means your typical retail trader on a platform like Robinhood, if they do options, they're just simply buying calls or buying puts. They're not doing spreads at all. So that's not how a professional would be trading or does trade options. They look at multi-leg option strategies. So for example, here's selling a call spread. This red line here represents a call that you're selling, the 45.50 call, and you collect 4.5 points when you sell that option, but you simultaneously buy the higher strike price call and you pay 2.25 points. So the net result is you collect 2.25 points, or $112.50 in this example, minus your commissions, of course. And you look for the market to stay essentially below that, generally speaking, below the red line there. And then that trade would work out well for you. Same with a put spread, selling out of the money put spread, just the opposite. You sell this one put, you collect 3 points. You buy a further out of the money put, and you have to pay a point. In this example, you collect a net $100 minus your commission, and you look for the market to basically stay above this red line here, generally speaking, and that trade would work out well for you. And these are not naked options. These are insured positions. Your maximum risk is always capped in advance. These are called covered spreads. So no naked options trading allowed, folks. And there's some benefits to that. First of all, if you're trading covered spreads, there's no unlimited risk and there are no margin calls. And that's a big deal, because if you have uncovered spreads that you're trading, you're going to end up on margin call. sooner or later, I guarantee it. And you're going to have to make a decision where the market either forces you out or you're going to have to send more money. And you don't want to be in that position. And of course, if you're doing naked options, at some point, your whole account is going to blow up. 30 years, I've never seen someone trade naked options without giving it all back. So take that for what, for what you want. But here's a good summary here. Who is margin and why does she keep calling you? So avoid that, folks. No margin calls with covered option spreads. So that's how we do it. Covered option spreads only. So, and here's another example of a spread, an iron condor, and I mentioned non-directional strategies earlier. It's just a combination of the put and the call spread that you saw a minute ago. And here's what it looks like. You sell an out of the money call spread and you sell an out of the money put spread simultaneously, and you collect the premium and you look for the market to stay in that range. Okay, and then we're going to jump into the demo here on the software in just a second, but one more strategy. This is our proprietary strategy. Some people have called it kind of weird, and we take that as a compliment. It's called a dragonfly. We developed this years ago. It's a 6-legged option spread, non-directional, and it's simply put, a variation on a condor. So what am I talking about? Let me slow down here and walk you through this here. You can see the calls here and the puts. So the red line, you sell 4 of these calls. You buy 3 further out of the money and then 1 closer to the money. And the same structure on the puts. You sell 4 puts, you buy 3 further out of the money puts, and then 1 closer to the money put. And this is a completely different dynamic compared to the condor because, again, you buy this call and you buy this put. And if you notice, if you can see on your screen the details on the pricing, this call option that you buy is a 40-10 compared to the calls that you've sold are 40-60. So this is 50 points closer to the money, and this is 50 points closer to the money compared to the puts you sold and the calls you sold. So those will have a higher delta, and therefore they will hold their value better and lose value slower compared to the others in the trade here. So it completes a different picture, so to speak, or paints a different picture, and I'll show you that in the demo, how the dragonfly can work to your advantage. And there are other strategies, of course. I won't get into all of them, but we have a unique approach with bearish or bullish strategies. This is something we call a bear hedge. So you simply sell an out-of-the-money call spread, receive a credit, and with that money that you received, you buy an out-of-the-money put spread. And so this may gain value as the stock index decreases. You might use it for protecting your portfolio. Simply put, you sell this out-of-the-money call spread, you collect that money, put it in your pocket, and then you take it out of your pocket and you simultaneously buy an out-of-the-money put spread. So if the market keeps dropping like a rock here, then that trade should work out well. And if it goes sideways, it may be that you don't actually lose any money at all, because oftentimes you can do these spreads for a basically even money or even a small credit when you place them. But here's the question that's Jackie Chan, right? So he's confused. So what market are you going to buy and sell? What strategy would you use and apply? At what price? What's your timing on your entry, and also how do you manage it? How do you manage the risk and the profits? So that's called Theta Trader. This is our proprietary solution. We pre-build the option spreads for you with an algorithm that will curate what we call theta trades for you, advanced strategy automation, bull, bear, and flat markets, advanced automated risk and profit tracking, something called the risk thermal indicator, or the RTI. So simple, effective option spreads that are created for you and then managed automatically for you for profit and risk. And I see a bunch of questions coming in, so I'm not ignoring you. I just can't get to them yet. So I want to make sure that we get into the demo here as soon as we can. So just a moment, folks. I need to switch screens. And yes, I do see several people asking about, I think, a recording. Yeah, of course, we'll get that recording to you. All right, now, you are looking at, I want to make sure you can see my screen. Let me know if you can see the Theta Trader screen, everyone. Okay, yep, I think we're good. Yep, we're looking good. Okay, folks, thanks. Let me show you how this works. So this is Theta Trader, and this is a demo account here for webinars, you can see. And you'll notice this section here for Theta Trades, and there are bullish strategies that are pre-populated, bearish, or non-directional neutral. And we're looking at these three markets, the E-mini, S&P 500, NASDAQ 100, and Russell 2000. So those are the indexes that we're trading. And a little bit later, I'll tell you why it's important that we're trading those. And you'll see your open short positions here at a glance right on your home page or your dashboard. You'll notice some of these colors here, and I'll explain that too. And these are any open bought or long positions that you might have in your account. And this is all your account info here, and this is all interconnected with your altavest trading account. So it's all tied in with your altavest trading account, and of course current quotes here as well. So what I like to do here is start off, since we looked at the condor and the dragonfly, we'll go ahead and take a look at some of the theta trades for today. And these are the condors that the algorithm has chosen for us. And here you have days till expiration, so anywhere from 16 to 67 days of time. And then you have the contract itself, the name of the contract or the expiration. And here are the strike prices. If you hover your mouse, you can see it gives you all the strike prices on that position. This is your maximum profit potential at expiration on that trade. And this would be your, what they call your targeted annualized return. And just a word on that, this is really to compare one trade to another based on days till expiration. So you'll notice days till expiration is 16 on this one, and this one is 67. And so obviously the ones that have a shorter duration would compute to a larger targeted annualized return compared to something that has a longer duration. So just to compare one trade to another, it's not to suggest you're going to generate a 286% return for the year if you place that trade. Now, let's look at the March expiration here. Has 67 days. Now it pulls up this table, has a lot of details. We'll go over that in just a second. But the first thing I like to do is look at a graph. So here is the call side of the trade, and here's the put side of the trade, and here's the current market. So you can see just visually, I think it's important and helpful to look at that. And really with the condor, again, you're looking for the market to stay in between that upper and lower range. Okay, gives you the expiration date, settlement value. This trade settled at 3 points. $150 would be the net premium. Your put risk, call risk, commissions, cash required, profit potential, targeted return on cash, targeted annualized return. And then here are the strike prices that the algorithm has already selected for us. It's already pre-built those. You could change it if you wanted, but I think that really defeats the whole purpose. Okay, now let me refresh that real quickly. Oops, just a second here. Just wanted to point out that you can change the strike prices, but again, most everybody just accepts what the algorithm is doing because that's the whole point of having the algorithm. Now, So the 3410 put, you're selling that, and notice the delta is 9.97. So that means there's over a 90% probability that this particular put option that you're selling to someone else will expire worthless. And now the call has a 6.72% delta. So over a 93% probability that these calls will expire out of the money as well. And that's really the big advantage here. So you have this higher probability outcome just according to the math, where these options, the math says they have a very high probability of expiring out of the money. And you always default to a quantity here of 1 and a sell. You're selling the condor, meaning you're collecting that net premium. So we'll do 2 of these. We'll leave the price here alone at 3, and we'll just place the order. And it's just that simple. Assumes you're filled here because you're in a demo account. And it's just that simple. I'll go back and I'll show you a couple other things real quickly, and then a really great feature. Right here, there's a simulator, and I've loaded some trades. You can go backwards in time. And I want to do this real quickly. That way you can see the screen, more of it here. So this is a iron condor. Let's imagine we had a time machine and you went back to September 1st of this year, and you looked at the theta trades and you chose this in the month iron condor. So this is what would have happened if you were trading that, and you can watch it go forward here in time. Now I'll explain these colors. Green means good, do nothing, and yellow means elevated risk, slightly elevated, but still do nothing. And then green, of course, is good, do nothing. That's the risk thermal indicator. It's all color coded for us. Okay, and you can see just that choppiness here, but meanwhile the position here, the condor, is still green and it's slightly profitable. And then it turns blue, and what does that mean? Blue means take profits. So when you get a blue signal, the algorithm says that's when you need to close out the trade and take your profits and move on to something else. Now here's the real key. The real key is you can automate this so that when it turns blue, Theta Trader is scanning and monitoring your account for you, and it will automatically submit that order for you to close out the trade. And I'll show you more about how that works. Now here is the October end of month dragonfly. So this was the October end of month condor. And imagine you did a condor on that day on September 1st, but also imagine you did a dragonfly. Let's look at the difference. If there is a difference. Okay, so you have some yellow, slightly elevated risk, and that makes sense with the market dropping and getting closer to that lower boundary. And back to green. And then it turns blue. So that means get out, take your profit, and run. And again, you can automate this and have Theta Trader automatically close that out. So that was on October 21st. You had a profit-taking signal on the dragonfly, and you had the same profit-taking signal on the condor on October 21st. So those both worked out well. Now I want to show you kind of a distinction here between the condor and the dragonfly. Here's another trade, an end-of-month trade for a condor placed on October 21st. So again, all green, do nothing. Even if the trade's turning negative, your P&L is red, negative, yet the RTI is still green. So still do nothing. You have that guidance there. And now you have a profit-taking signal right here with 25 days till expiration. 25 days till expiration. Take your profits and move on. And let's look at the equivalent dragonfly. On the same day you did a dragonfly, the same day as the condor, or the same time I should say. Well, that turned profitable here on November 28th. So you can see here, instead of waiting until December 6th for a profit signal, With the Dragonfly, you had a profit-taking signal on November 28th, so you're able to get out of that trade at least a week earlier or so and take your money and move on. So the Dragonfly can often mature much more quickly than a Condor. So we really, really love the Dragonflies. Let's take another look here. Here's a Condor. Kind of forget how these play out. And you can go all the way to the end if you want in one click. You don't have to watch it play through, but kind of fun to watch it here in the demo. So yellow, elevated risk. The trade's still negative. Now it's orange. That's even higher risk, but still do nothing. And then it turns red. Take your loss and move on. This is a losing trade, and you can automate this. If it turns red for a loss, ThetaTrader will automatically place that order for you and get out of that trade for you and cover your loss. So you took a loss here on March 9 with that Condor. So let's look at the same expiration, the March 2020 expiration. And instead of a Condor, what if we had done a Dragonfly? You can see it's yellow, the trade's red, turning a little bit negative, but nonetheless, the RTI says do nothing. And then it turns blue. You have a profit-taking signal on this day. So this Dragonfly matured enough and generated a profit-taking order for you compared to the Condor that did not. So you would end up having a red RTI here on the Condor compared to the blue RTI on the Dragonfly. So that is the big, big distinction, and again, between the Condor and the Dragonfly. Sometimes the Dragonfly will be profitable when the Condor is not. All right, now here is a bear hedge, and I just threw one in here. We talked about that. Remember, this is selling an out-of-the-money call spread. You collect the money for that, and then you buy an out-of-the-money put spread. So basically, you would do this if you're, basically very bearish. And here's how that might look. Don't worry about the colors on this one, but I'll show you the P&L. So you can see here at this point in the trade, it's green and profitable, making a little bit of money, and that makes sense. The market's dropping, but kind of slowly here, and that's okay. Now it really starts to accelerate, and let's just say you're hanging on to this because it's a hedge against a bigger portfolio you have of stocks, and you just hang on to it. Well, this market drop expired below your long put spread here, so you end up essentially making a maximum gain on that position here. So you can see how the bear hedge can work out well. If it goes the wrong way, of course, then this call spread you sold, you would have to cover that, and just like you would if you go short a call spread or the Condor side of a call spread, for example. Now here is, under my account, I'll show you a couple of things real quickly. You have daily research, you have settings for your account, and let me jump to those settings real quickly. See if I can find those right. Here they are. So you go under my account, under settings, and this is how you do it. You just check this box here to activate the risk manager and activate profit directive, and then click save settings. And that's all you have to do. And then ThetaTrader will scan your account every day, and then whenever you have a profit target or a risk target reached, whichever comes first, that order will be generated. So you're always going to be out of that trade before it expires. In the examples, for example, like we just showed you, the Condor, the Dragonfly, you're going to be out of those before they expire. Okay, now we again have daily research under here, Trade Scope. It's something we do for all of our clients, of course, in using ThetaTrader. We use a bit of analysis and provide some forward guidance just to help inform your trading decisions here. We have daily commentary. That's sort of a review of the trading activity for the day, as well as what happened in Asia and Europe and the US. Looking ahead, also with any economic data that's due. We have a calendar there, and then of course some of the support resistance zones here. So that's also available to clients every day. And then there's a great help file here as well. And if under glossary, this is kind of a convenient section here. You can see all the color coding and what it means. Won't go into it, but it's all right here. All the definitions for all the spreads. And then this is very helpful. A lot of people use this a lot here. We have video tutorials, a whole section here on video tutorials. You can dig into the Dragonfly more, how to use the My Account section, how to place orders, your open and close positions, how to look at your dashboard, which we kind of looked at just 10 minutes ago. And this is great here, education, some more videos for you. If you need a refresher or review on options trading and some of the more advanced option strategies that we're looking at, that's all available here as well. So everything you need is all available within ThetaTrader. Now this is what it looks like if you want to look at your open positions on the dashboard here at a glance, or here. But you can also look at them all on one page. And I'll show you that here. I see some more questions coming in, so that's great. So you'll have a summary of your positions here at the top. There are 8 short option spreads on the open positions sitting on an open gain, and there are some 5 long spreads sitting on a small open gain, and those are your open positions. So you can see at a glance with the color coding, and you'll notice oftentimes the trades that are green are almost always going to be your short positions. And why is that? Because of the probability of the math. You know, those are going to have probably 90% or greater probability of expiring out of the money. So those are your higher probability outcomes. And you notice the one that is orange here is a long spread, buying a put spread. And the one that is orange here is also buying a put spread. And those are probably part of a bear hedge. But that gives you some idea of what to look for on your open positions. And if you wanted to look at any history on any of the trades, here's this Dragonfly, you could click on it. And you'll see it's highlighted gray, and then you just scroll down and you can see here from the first day you placed that trade on December 2, had 61 days till expiration, and it's been green the whole time. Little bit yellow, little elevated risk, but maturing nicely is green and is very close probably to a blue RTI. So you can see the details on any of your open positions. And then of course, closed positions you can access this way as well. You could filter, or you could just look at them all on the page, and there's 20 on the page. So there are 15 that were winners, 5 that were losers. And this is interesting. 16 of the closed positions were short option spreads where you collect premium. 15 of those were winners and 1 was a loser. And that was the total there. And of the 4 losing bought position, or the 4 bought positions or long option spreads, all 4 were losers. And that makes sense. Again, that's a lower probability, much lower probability outcome. So that's why we focus on collecting premium for the most part. Our main focus is the higher probability outcomes where we sell option spreads and collect that premium. But you can see here just a review of, and these are just random trades I use for the demo account with webinars. So there's really no thought going into this at all. I'm just picking trades and using them for illustrative purposes. And I'll go back here and show you one other thing, and then I want to show you the best feature of all. And thanks for sticking with me here, folks. And let me know again if you have further questions or comments along the way. But I think I'm probably getting to a lot of what's in your head because I've done these, webinars enough to know what people are thinking and want to ask. But If you wanted to do something in the NASDAQ, you could, for example, or the Russell, you could, or maybe you were bullish and you just simply wanted to buy some outright calls, you could do that, or some call spreads, you could do that. Every now and then we've done some butterfly positions. If you're excuse me, frog in my throat. If you're familiar with that, that's fine too. But those have a very, very narrow range of possible profit, but that's okay. And you can even just do half a dragonfly. Here's an example. Maybe if you're not something we do a lot, but if, for example, you're bearish and you want to sell just the call side of a dragonfly, you could do that. And this is what it might look like, just like that. But more often than not, you might end up in a position where you're simply just selling some out of the money call spreads if you're bearish. And here's a February end of month expiration, for example. And I want to point out one other thing too. So here's what that would look like. You're just selling this out of the money call spread. Has all the details here for you. Maybe you want to do a quantity of 3 of those. You can see your margin changing up here. In fact, let me do this. You can see it better. So if I change the quantity, see the cash required goes up or down, obviously, with the quantity. So we'll do 3 or 4. We'll do 4 of those. And there you go. It shows up as being filled here because it's a demo account. But I will also want to point out one thing with a condor, for example. You can also buy a condor. You don't have to sell the condor and collect the premium. But again, that's a lower probability outcome. And we've done that occasionally where we buy a condor. So for example, the only reason you might do that is if you expect a really large move up or down in the near future. So maybe you want to do that ahead of a CPI print coming out, for example, Thursday, or ahead of a FOMC announcement, something like that. But you can also buy a condor. So instead of selling it, the call spread, you buy it, and then you buy the put spread. But of course, you're paying money to do that. In this case, you're paying 2 3/4 point. Maybe we'll do just 2 of those for the heck of it. And that's what it looks like. So buying 2 condors. So I just wanted to point that out. Now, I think that covers the dashboard part of what I want to get into. And before oh, excuse me here, my mouse got kind of sticky there. Yes, I'm going to switch screens here. And let me show you the best feature of all, at least in my humble opinion here. And I can say that because people really, really lean into this feature I'm going to show you. I mean, absolutely love it. I can't imagine why they don't see other people doing the same thing. So we're going to make it easier. And I want to make sure, yep, you've got the right screen there. So these are the trade alerts. These are 1 minute or less. I mean, you're talking 5-second trade alerts here. One touch response, you simply touch your screen, accept or reject, and that's all you have to do to use that trade alert. It's that simple. These alerts are live, meaning they're integrated with your altavest trading account. So these alerts are connected, and you touch accept, and our technology handles everything for you and places the order for you. And if your order is filled, then it's populated in your Theta Trader account. And then if you have your automated risk and profit directive clicked on, then basically the trade's on autopilot. It will be closed out for you. So all you have to simply do is touch accept if you want to accept that trade. Here's what it looks like. You receive a text message with a link. I'll stop it there. You'll get a graph of the trade. You'll get a description of the trade. Here's a week 3 iron condor. Here's the call side. Here's the put side. You can tell it's a couple years ago, but it all works the same. You can see your account number, the premium you're trying to collect, the cash required. And look at this. I want you to pay close attention to this. It says sell 10 of these condors at a price of $265. Well, how does it know to sell 10? How is the quantity pre-selected? That's because this is integrated with your account. Everything is all integrated, and the size of the trade will be appropriate for the balance, the account balance and the cash balance in your account. It's going to trade, and it's always going to be essentially a very small percentage of your cash balance that the algorithm is going to suggest in terms of the quantity. So you'll notice too the days till expiration, 71 days till expiration, your targeted annualized return, current futures price. And then if you like it, you just touch accept. If you don't like it, you touch reject. And that's all you have to do. You don't have to be tied to your screen. You don't have to screen watch. We'll look at it one more time without my talking. And that's it, folks. So that's Data Trader and the Trade Alert feature, which is really something that people can't really live without. Once you have it, you can't live without it. So here's how to get involved with Theta Trader and become a member, a Theta Trader member. So I want to make sure to give you the hot tip here, and we're going to have a special offer for you. And remember, you get the Theta Trader software, everything we just talked about, the Theta Trades, the RTI, color coding, risk and profit management, your trade simulator. You saw all those back tests that we did. You can go backwards in time like a time machine. That software valued at over $3,500. And then the one-touch trade alerts that you just saw, a brief video. One-touch trading, you simply accept or reject, and those trades are tailored and sized for you. And also I want to point out that the trades you receive on the trade alert will not be redundant. So you won't have to try to remember, oh, gee, do I already have that strike price in my account? Do I already have that expiration? Theta Trader is doing that for you. So the trades will be distinct and they won't be redundant. They'll be laddered with strike prices and expirations from whatever's in your account, and the quantity is pre-sized for you. Again, everything is integrated with your account. You just touch accept to place that order, and then the RTI can take it from there and automatically manage that trade for you moving forward. That trade alert value over $4,400. So you have the Theta Trader software and the trade alerts valued at over $8,000, all part of your Theta Trader membership. And now here's probably the better element of it in many people's opinions, is you have a private coach. You have real people to work with. You have 1 hour screen sharing lessons and sessions, Series 3 licensed, experienced traders, not just a phone clerk. So you have a co-pilot. You can develop a relationship with that person who's licensed, discuss strategy, review your trade history, value at least $7,500. I know that I talk to people and they tell me I've spent $25,000 on a course, I spent $50,000 on a system, whatever it is. Okay, that's fine. We don't want people who have no knowledge doing this, but on the other side of the coin is we can provide what you need all in your Theta Trader membership. So what you need to know is all part of your Theta Trader membership. And again, you have the software, the alerts, the private coaching valued over $15,500. And at the risk of getting corny, yes, there is more. Let's not forget the proprietary research. People lean on this every day. Again, TradeScope and the daily trading summary, that'll help inform you as to what's in our heads and what we're doing and why, and how to use Theta Trader to its fullest. And then, of course, I mentioned those online tutorials there, the videos, the help files, the instructional training, as well as the knowledge base for options. That's all part of Theta Trader as well. So you have the software, the alerts, the private coaching, and the research valued at over $18,500. So you have that membership there, $18,504. But no, that is not going to work, is it? And in fact, we used to do this at $4,000 in live in-person events, and we're going to do a lot better than that. And at times, we thought, well, how about under $1,000? That would be attractive. Yes, it is attractive, but we'll do even better than that. We'll get 80% off that retail price, and this does expire for limited time only, $797, and that is one low payment. That's a lifetime membership. One low payment, $797, that's lifetime. You pay one time and that's it. And here is the link, cf.altavest.com/TT. And there's my direct phone number. So what I recommend is take a screenshot of this page and you'll have our info. And if you call me now, of course, I'm on the phone here, but it'll transfer to someone else you can talk to, or it'll go to my voicemail. So either way, that works. And you have really no excuse because there's a 30-day guarantee. So if you think this is something that you'd like to do, I would sign up, and if something happened in the next 30 days, you had to cancel, that's fine. 30-day guarantee on that membership fee. Now, a few FAQs, and I see some more comments and questions. Let's see here. Okay, yeah, keep them coming, folks. I think we're going to get, just looking through the list here. All right, few FAQs. Tax efficiency, you can lower your tax rate by over 10% because you're trading futures and futures options. There are 1256 contracts according to the IRS. And the benefit there is 60% of your gains are taxed at the long-term capital gains rate. And that's usually much lower than your individual income tax rate. So if you have an individual here trading stocks and they generate a 20% return, in this hypothetical example, they would pay $7,400 in tax, 12.6% return. But if they're trading futures options, then they have a tax savings of over $2,000 just because it's tax efficient. There's no more itemizing as well with what we do. You just receive your 1099, but the profit or loss, that's it. So always consult your tax attorney or advisor though. And IRAs, yes, you'll want to contact us for details. We have IRAs every week coming in with us and transferring to us. You can combat market volatility by investing in alternative assets with a self-directed IRA. So yeah, I agree with Forbes. People do love using their IRAs for this. Why trade E-minis? Well, they're liquid, they're efficient, and they're cost effective. And the E-mini is actually huge. It's 2.5 times larger than all ETFs around the world, and that's the S&P 500 E-mini. So you can see, according to the SPY, in comparison, the E-mini S&P 500 is almost 10 times larger in terms of average daily dollar volume. So that's a bit of trivia for you. You can use that tonight around the dinner table. So there's volume, liquidity, and access, superior execution. ES options offer a cost savings of $4 to $15 per contract. And that's because of the tight bid offer spread. And then you have that large market share. You have all the annual expirations and strike prices that ensures granularity and coverage. And what that means is when our algorithm is looking for strike prices to build a theta trade, it's going to be able to find, the calls it needs here and the puts it needs, and then A few days later, if you need to place another trade, the market's moved a little bit, you'll place another set of calls and puts. And a few days later, place another set of calls and puts, and you see they're always staggered and laddered in terms of the strike prices. But you can't always do that if you're trading in other instruments that don't have the volume and liquidity, such as the E-minis. And here's a big deal here. This is actually a big deal. If you want to do a dragonfly with individual stocks, you can't do it as one order at one price like we can. Try it. I've tried it. You can't do it. It's just a totally different system trading stocks compared to futures. So you have to break up the spread in two different orders if you want to do a dragonfly on an individual stock. And even then, I would be, the liquidity isn't there unless you're trading in just maybe the 10 largest, issues. So that's a big advantage. Now, retail stock options traders, let's go back to our presentation here. She says most retail stock traders only have access to the most basic call and put options. And they don't have access to option spreads or other more sophisticated strategies. But Theta Trader allows you access immediately to these sophisticated option strategies. So you can track one or two markets, not thousands, efficient margin versus stocks, and a clear cost structure, not opaque. I see some other questions. I'm going to get to those answers in just a second, but keep hanging on with me, folks. And there's no hidden cost with the E-minis. So these are not securities. These trade at the CME group on their Globex electronic exchange. So every order gets treated equally. If you place an order for 5 spreads, or JP Morgan places an order for 5,000 spreads, your orders are all traded electronically at the same electronic Globex exchange. Equal treatment. There's no payment for order flow. That's a bunch of nonsense with stocks. If you don't know what I'm talking about, I'll get to it in just a second. What it means is places like apps like Robinhood say they have commission-free trading. Well, it's not commission-free. It's really a hidden cost. It's called payment for order flow. She talks about it here. Most popular trading apps generate a lot of revenue from payment for order flow. They can make more money from options than regular stock trading. So there is an incentive for them to lure investors into options trading. Look, how do they make money here? Market making division at Citadel in 2022 generated a record 7.5 billion profit. So how do they make it? It's called payment for order flow, and Citadel will pay brokers like Robinhood to send their customer trades to Citadel for execution. So you place an order with Robinhood, and I'm picking on them, but others are the same, and you think that Robinhood is filling your order. It's not. It's being traded and filled by a group, a third-party market maker, and they do that because they take the spread on the order. So it's not commission-free. Robinhood customer orders are executed at prices inferior to other brokers. So they got fined 65 million. People, are trying to save a penny, but they end up losing a nickel. Payment for order flow is disguised commissions. If you want the broker to work for you, pay a commission. Nothing of value is truly ever free. So there's no payment for order flow with altavest and futures options. So I want to make that clear. And our commission rates are 5.25 round turn all in. So it's very competitive. Here's just as of this month, here's a big box brokerage firm, Securities. They trade everything. Their futures and their options, they say they're at 225, but that's per side. And then they add more fees on top, clearing and exchange fees. They don't even tell you what they are here, but you have to read very carefully. Basically, it ends up being more than what we charge. And I also want to point out that all the trading cost in Theta Trader, all the numbers are net of commission. And the performance, everyone's different. Everyone makes their own trading decisions. And again, everything is net. All the percentages and dollar figures in Theta Trader already takes into account the trading cost. And you have account sizes. It's up to you, but a minimum is 25,000. And if you want to do a lot more, we have a lot of 6-figure, 7-figure accounts too. If you do 50 to 99,999, you get a 50% rebate on that membership. If you have a $100,000 or more account, we'll just rebate that membership to you when you get your account started. So people love to take us up on that. And if that works for you, great. You can just get that membership fee rebated to you. I see some questions on that, so hopefully I answered that for you. And again, IRA, individual, joint, corporate, LLC, trust. And just to kind of wrap it up, why would you even consider using Theta Trader? I know you probably like what you saw. If you've traded options, you're probably going to like this a lot. But maybe you're thinking, well, do I really need this? Maybe I can just keep buying stocks and it'll come around eventually. Well, you really need some alternative approaches in your portfolio that may improve diversification, lower portfolio risk. And risk of what? And, well, how about inflation? There's a great presentation I saw just the other day. The new plan will make you poor. You just pointed out the value of the dollar. That dollar used to be worth $26.14, so it's lost 95% of its purchasing power. It says we're repeating the 70s here. Inflation soared in the late 70s to over 13%. So it's a good chance this year, by the end of this year, we could be certainly continuing to fight inflation that we thought was ebbing, but may actually start to increase later on. So I think that's a good point to make. November CPI still 3 times higher than the target rate, highest in 40 years, hourly earnings plunging. So this person still has their head above water representing wages, but he's got that inflation shark ready to chew them up. Global recession, yeah, and IMF here says US will be 1% growth for 2023, and I think that's optimistic. The global economy will be in recession this year, a third of the global economy. Last year was a tough year, and it'll be even tougher this year. This is interesting. This here is the US stock market compared to the world global stock index X, well, without the US. You can see all the growth basically has been in the US for the most part, and that's because of the Fed. Free money, easy money. So that's coming to a close. Powell has made it clear there's no dovish Fed pivot. The Fed minutes point to more rate hikes. IMF says she backs up the Fed's tough stance. The Fed is correct to emphasize it will maintain restrictive monetary policy, inflation not turning the corner yet. And this is interesting, folks. The Fed does not want a stock market rally. It can result in potentially inflationary consumer spending. If equities continue to rally on bad economic news, the Fed will need to push forward to an even higher terminal rate and unofficially add weaker stocks to the mandate. So if stocks rally for whatever reason, the Fed's not going to like it, and that's going to make them restrict rates even further. I mean, look at this here. The fastest rate hikes in history in most magnitude right here. The Fed is not getting the recession they wanted, so they have to turn more hawkish. So I can go on and on. So much for the Fed pivot here when employment went from 3.7 to 3.5. Fed won't stop rate hikes until it terrifies the wealthy investors. The Fed's Bostic just yesterday said rates should remain above 5% for an extended period, well into 2024. It says here, a long time. I am not a pivot guy. So they're telling us, folks, they're giving you the answer. Not often you get a test where they give you the answer. Everyone, Powell, of course, being the most important, but, Daly out of San Francisco says she sees rates above 5%. Stabilizing prices requires making tough decisions. This is just today from Powell. So he's, it's pretty clear that tough decision here, he says, requires measures that are not popular in the short term as we raise interest rates to slow the economy. So yeah, everyone's talking about this pivot, but that's not in the cards right now, folks. It's just not there. Even global central banks, it's not just the Fed, ECB, I won't read all this, but you look at Europe as well, it's happening. World Bank says we're perilously close to falling into recession. And this is interesting. Look at this. Here's inflation up here, and here's economic growth. That's what you call stagflation. Just, it looks pretty ominous on that chart when you see it like that. More negative data out of the US. This is interesting too. And then I'll kind of wrap it up here with a couple other final tidbits. I want you to stick around though for the last few minutes. I got a couple important slides here, but this is a good one here. So this is a index here of the sentiment and confidence indexes. You'll notice when it peaks, this yellow highlighted area, subsequent to that, this gray bar, that's a recession. You have another fresh peak here, and a gray bar follows. Another fresh peak, and a gray recession follows. And look here, you had it here in 2019, and you had the recession, and now look, we're even higher. We're at record highs. So it says here that essentially over the next 5 years, and historically speaking, when this happens, you get a negative 3.1% return on the S&P 500. So not looking good. And also stock markets don't bottom before the recession begins. So that's a good point. And this is an important one too. The index of leading economic indicators, that's showing recession here as well. You can see whenever it drops below, you can see here this recession signal here and here and here and here. So that's something to pay attention to, and we're already in that territory here. So US manufacturing, the weakest since COVID, retail sales, slowing economy. Every economic report was a disaster. That was earlier, last month, three weeks ago. US industrial production slow, jobs data, imminent recession. Anyway, I'm not trying to get doom and gloom because this eventually everything mean reverts, right? But I'm just pointing out, I think you need some alternative strategies. You do not want to be just passively long, gloomiest decade or US manufacturing, services, contracting. And we just have to trade what's ahead of us, right? Trade what the market gives us is really all I'm trying to point out. US health economy deteriorating at a market rate. Chicago, this is interesting. The Chicago PMI collapses to COVID lockdown lows, screaming recession. And it says here, in 55 years, the level of Chicago PMI has never not failed to coincide with a recession. So you've got all the job losses happening in tech, 90,000 workers through November. It's even higher. Credit card debt soaring here, savings plunging. Here's savings down here now, credit card up here. Hardship withdrawals from 401ks, Blackstone limiting withdrawals, yield curve here. Look how negative that is. That's really that's maybe the only thing you really need to pay attention to. That's really a harbinger of bad things to come. Housing, on and on and on. Foreclosure activity, home sales down 40%, most on record. Fastest housing slowdown on record. Okay, so I don't want to make everyone nervous to death, but we have to be in touch with what's happening in terms of reality and not just kind of bury our head in the sand here. And let me get to what I wanted to really point out here. But you all get the picture here. I just had a lot of extra slides in here. I didn't necessarily want to go through all of them. Carl Icahn, he is one guy to pay attention to. This is earlier last year. It said the worst is yet to come, and he's been right so far. And he said that hedging strategies were the key to his success. He was up by 30% through the first 6 months of 2022. So Stanley Druckenmiller, if you don't know who that is, you should. He says we'll be in a deeper recession here in 2023. You'd be stunned if you don't have a recession in 2023. And I'll show you one last thing about him in a second, but you want to avoid large drawdowns. You don't want to just always buy that dip and try to be passively long. You want to try to sidestep those bear markets, because here I'll show you this chart. It took 6 years after the tech crash and 5 years after the 08 crisis to regain prior highs. So you don't want to be sitting and waiting and thinking it's going to turn around in 6 months. It doesn't always work like that. And look at this. What if you bought the Dow in 1929? You didn't get back to even until 1954 or in 1966. Where was it in 1982? Same place. So there can be long periods of time. And remember, if you lose, 40% of your money, you need a 67% gain to get back to where you started, for example. So Druckenmiller, again, high probability stock market will be flat for an entire decade. And who is he? Well, he had an average annualized return of 30% from 1986 to 2010, managing, I think, I don't know, 20 billion or 50 billion. I can't remember who's counting, but, and that was without any drawdowns. I mean, it's incredible, incredible performance. So pay attention to guys and gals with that kind of performance. Forward returns will disappoint compared to the last decade. I think that's probably true. More layoffs from Cisco, Bed Bath & Beyond going bankrupt, Amazon 18,000. Anyway, so I want to get to this last section here and wrap it up. And let's see if I have additional questions. Let's see here. Anyway, we think you should have a slice of your investment portfolio in alternatives, and Theta Trader can be a part of that. I think you'd love using it. We'd love to have you. So remember, Theta Trader available for all market conditions, pre-selected spread trades, automated trade exits with that RTI, and then the integrated one-touch trade alerts. And of course, the personal coaching is what really ties it together. So here are the 5 steps. You just complete that order form, that link right there. And let me see if I can get that. I'll just put that in the window here, the chat window. So you complete the order form, you'll get your Theta Trader login credentials soon after with an email on how to open your account. And then once your altavest account is open, you'll have instructions on how to fund the account with a bank wire or an ACH transfer. And then you can begin accepting your trade alerts and using the Theta Trader platform. It's that simple. And again, one low payment, $7.97. Huge discount. We like doing these live events for our webinar audiences and our internet crowd. So people join from all over the place. We'd love to have conversations with you. So here's my number, 949-236-6961. You can email or just Eric, E-R-I-K, at altavest.com as well. You can do that. I'll put that in there. And are there any more questions? I see a lot of questions that I think was able to answer. Yep, minimum account. Got that as ready as well. Anything else, folks? Any other questions? Shoot, you've got me here. If you've got a little more patience, a little more time, I can stick with you. If you want me to jump back into the platform, I can and show you a few other bells and whistles, or maybe you had some specific questions, let me know. I'm keeping an eye on the, I know I'll do one other thing here, and I'll try to keep an eye on the window here. Yeah, I know. Oh, people will ask too about Canadians. If you're in Canada, I'm sorry, we probably can't work with you. I wish we could, but we can't due to regulatory, the geniuses there within Canada and the US both, a little bit protectionist, but you'll contact us though for your situation, depending where you are located. There may be ways if you have a legal residence in different places. Yeah, we have a lot of people out of Canada that would love to work with us. We hear it all the time. All right, now let me switch screens real quickly. Yeah, one thing I wanted to point out, some people ask, can I make my own trade or build my own trade? Yes, you can. You under trading here, you use Trade Builder. And you can just choose your market, the contract, the strategy you want, and then just start building the trade the way you want it. Or, I think we talked about it briefly, you can just take a Theta trade and monitor it. And then someone's asking about, yeah, thanks for the question about performance. Everyone has different performance because they're all self-directed accounts and we're not managing the account for you. So some people accept certain trades, other people don't. Other people accept them at different times during the day, or some people even modify them and change the prices or change the strikes. So everybody is definitely different in terms of their outcome and their performance. But yeah, we do get that question. And if you want to look again at your closed positions, that can kind of give you an idea. Maybe you can see that, again, this is just me randomly doing this during days with presentations. You can see the entry dates here, back from essentially beginning of November. So that's what that looks like. You can look at more of them here back from October till now. So maybe that gives you some idea and helps answer that question a little bit. Oh yeah, someone said they'd signed up, so thanks for that, and we'll get back to you. There are no yearly dues. Let me, just a second here. No, there's nothing yearly. It's a one-time membership fee, and you're a lifetime member. That's it. And of course, if you have $100,000 or more, we rebate that fully to you. A lot of people love to do that. And if you want to use Beta Trader for trading stocks, that won't work. It's only working on the E-mini indexes. And someone asked, we are the brokerage firm. Altavest is the brokerage firm, but good question. This is our technology that we developed for our clients. So you get to use something proprietary, and it's dare I say, it's a bit of a niche that is quite exclusive in terms of the appeal. A lot of people that are trying to trade, $400 and make themselves millionaires, not to say denigrate people, but this is not what that's for. This is not a get rich quick type of thing. So we're using professional style strategies. These are institutional grade approaches and strategies, and applying it, reaching out with it, built this strategy, built this platform so we could reach out to a retail base of sophisticated investors and make it something that otherwise would not be available to us at home. This is not the kind of trading that the typical person at home is probably doing, and we want to emulate what the professionals are doing. So that's why we're doing this. And someone said, yep, they'd signed up, and then they'll give us a call. Yep, please give me a call. Absolutely. And someone mentioned Vancouver. Let me know, give me a call and tell me your situation. Typically a Canadian resident won't be able to work with us, but it just depends on sometimes their individual situation. So I'd love to hear from you. And let's see what else. You can sort, again, I think I showed you up here how to do that. That's all your closed positions, your open positions here. Let me just go back here. And again, you'll notice here that out of the total trades on that page, there are 10 trades, 8 were winners, 2 were losers, 8 were short positions or collecting premium, and 7 of those were winners, and 1 was a loss. So really, the vast majority of your gains will be from your short option trades, the higher probability outcomes. So that's what we're going to focus on. If you're a client of ours, you're going to really probably focus on that aspect of your trading. You're kind of doing the opposite of what the typical retail crowd is doing, and we think that makes a lot of sense. All right, folks, if there's nothing else, I think I'll wrap it up, but let me go back to the screen real quick. And switch my other screen here. Trying to juggle different screens so I don't have to have too much downtime when I'm clicking around. Let me scroll down to more questions. Nope, we do not invest in crypto. And yes, you can transfer your funds to us. Absolutely, good question. So yes, people transfer accounts to us all the time. You know, obviously you have an IRA, self-directed IRA, and a lot of times people would say like I'm not doing well with what I'm doing now, or I'm not doing enough, and I really need to put something to work. So absolutely. And yes, there is a replay. Absolutely. All right. Well, really, that's great. Those are good questions. Let's see if I missed any because there's a bunch coming in. Another question I think I answered, but just to reiterate, if you're selling options with data trader, such as a condor or a dragonfly or a put spread or a call spread, and you set the risk thermal indicator and the profit directive and the risk directive, if you automate those, then you will always close those trades out before expiration. So yes, and you want to do that. You want to turn that trade and turn that money over. You don't want to just sit on it. But that's a good question. Okay, and I think that's going to do it. Yep, we'll get that replay out as soon as we can. And I see another hand going up. Want to make sure I get everyone in here. Yes, okay, we're all set. All right, everyone, thank you very much. And take a screenshot here. You can call me anytime. And of course, I want to mention too, this does expire on Friday, that discount. So it does expire and gives you some time to give me a call if you had any questions, or send me an email. But otherwise, get yourself signed up and we can get you started and onboarded right away. And again, you have that 30-day guarantee as a backstop. So really, you don't have any risk on that membership fee. But I think once you get involved and get onboarded and see it working, you're going to love it. So people really love using Theta Trader, and the technology is user-friendly, and it's not going to require any screen watching. You don't have to spend 6 hours a day babysitting your trades, and that's really part of the goal of Theta Trader, was to take a lot of that heavy lifting off your shoulders. So, all right, well, great. Thanks for joining. And yeah, someone asked about starting amounts. Minimum is 25,000, and if you do 100,000 or more, we'll rebate the membership fee to you. All right, great. Thanks for joining. We had a great crowd, and we'll be in touch shortly. Have a good one. Bye-bye.